Podcast Network Asia.
Okay, so for this session, I guess it's timely that we tackle not only yung gaining the knowledge about investing, but changing yung basic mindsets when it comes to your finances. So first is, we have to understand savings. When we talk about savings, usually kapag pinag-usapan natin to, ang pumapasok sa isip natin is yung income that we receive on a regular basis or irregular, depending on what your source of income is. And then you take out your expenses. Okay, so this are your utilities, your groceries, and all your regular expenses. And then whatever's left would be your savings. Now, the problem here is I've talked to a lot of people, especially mga nag-start pa lang to earn money or yung mga starting to have their own families. And what usually happens is mas malaki yung expenses than their income. So yung savings, okay sana kung meron, pero most of the time, wala, or worst case scenario, utang pa yung nagkakaroon tayo. Okay, so we have to change our mindset para we can put savings first in this equation. So the alternative that we are proposing is, instead of taking out your expenses from your income first, this time, when you get your income, unahin nating mag-set aside ng a bit for your savings. In this case, hindi na variable si savings. Okay? Kasi you're paying yourself forward na you're setting it aside, ensuring that you will always have something to be added to your ipon. Okay, next step is determine your revenue streams. Some of us, hindi lang naman sweldo yung pinagkukuhanan ng pera, or some of us merong multiple sources of income. Next is revisit and review your expenses. And third is identify trends and habits. Okay, so let's go to the revenue stream. So as I mentioned, well, for most of us, probably, salary talaga yung pinaka-main source of income natin. But for others na hindi employed, they have their businesses. And for those na retired na, they have their pension or their retirement pay. Now, if let's say, for example, you have your job, okay, employed ka full-time, but you're doing something else on the side or meron kang side hustle, then you determine lahat ng sources of income mo. If nagpaparent ka, for example, ng apartments or meron kang online business, so you determine everything that gives you money. Next is revisit and review your expenses. So ano yung regularly occurring na expenses natin? And that will also give you an idea how much you spend on a regular period. Okay? And ano yung mga negotiable na pwede nating bawasan or pwedeng totally i-eliminate. Next is identifying trends and habits. Okay? So this would be your recurring charges that you might not be using anymore. Okay? So for example, even yung mga subscription natin kanina, maybe a year ago, nag-subscribe ka to a particular subscription because you really needed that service, pero hindi mo napansin, let's say, for example, Spotify. Hindi mo na pala siya nagagamit over the last few months, and maybe you can already consider cutting it out of your expenses. Consider also your wants versus needs. Ano yung mga hindi naman talaga wired for you to enjoy life or to have in your daily expenses. And then set your realistic spending goals per expense type. But of course, this evening, hindi lang savings yung pinag-usapan natin. We're also going to talk about investments. So this is one level higher versus the previous example. So when you get your income, set aside something for your savings and then also set aside a portion for your investments. Okay, and then whatever's left, that's what you budget for your expenses. So why do we invest? Well, the bare minimum reason why people should consider investing is inflation. Now, inflation, this is the natural increase in the prices of goods and commodities. So we as individuals don't have any control on inflation. But unfortunately, this would have control over our spending power. So yung nabibili ng money natin over time decreases because of inflation. So how do you protect your money? You should be one step ahead of inflation by investing. So let's compare first, differentiate savings versus investing. When you save, you get a fixed interest rate. Okay? On the onset, kapag naglagay ka ng pera sa banko, whether as a savings account or into a time deposit, you know how much you would be earning, let's say, per month or per annum. Saving is basically accumulating your money. You add to your savings account whenever you can add to your account. Okay? And then it is PDIC insured. because the PDIC covers all deposit accounts. Whereas investing, most of them do not have fixed interest rates, but they do offer higher income potential. Investing is making your money work hard for you. So hindi mo lang makikitang any investment in the market right now, regardless kung anong bank siya, kung anong financial institution, that would say that this particular investment is covered by PDIC insurance. Okay? However, even if wala siyang PDIC insurance, you just have to do your own research. Sino ba yung nag-offer ng investment? Sino ba yung backers ng investment natin? To give you an idea on how sound the investment is or how safe yung issuer ng investment is. And then for UITFs, there is no holding period. Meaning, if you invest now, if you invest today within the cutoff period, you can actually redeem tomorrow if pasok dun sa terms ng investment fund natin without any charges usually. Okay? So, very liquid siya. If nag-invest ka ngayon, even if you consider na you will be investing for the long term and then nagkaroon ng emergency, you really need to take it out, you can do so without worrying na magbabayad ka ng fee or you need to wait for a certain time. Okay? Unlike a regular savings account that you really need to stick to the term that you agreed upon or else you'll be paying pre-termination charges. Okay? So let's go now into the basics of investing. So in BPI Wealth, we prepared yung 3 W's and 1 H. Okay, so these are the questions that you need to ask yourself before you consider investing. So basically, the objective, horizon, experience, and risk tolerance. Now, translated into questions, objective, why do you want to invest? Horizon, how many years can you stay invested? Experience, what do you know about investing? And risk tolerance, what is your risk tolerance for investing? So, puntahan muna natin si, why do you want to invest? Okay, so when you go into investing, you should have a goal in mind. Before, when I talk to people, ang usual na sagot nila is gusto lang nilang lumaki yung value ng investment nila. But if you can set concrete goals, okay, concrete objectives, that would help you a lot in being more disciplined when it comes to your investment. Okay, so that's your objective. Next horizon is how many years can I stay invested? So medyo related siya dun sa objective din kanina if you were able to determine specific objectives. When you go into horizon, you can be a short-term investor, a medium-term investor, or a long-term investor. So usually, short-term horizon, ito yung mga 1 to 3 years lang. Long horizon, it's 5 to 10 years or even longer. And then in between is yung medium term natin. Now, bakit important that you set a horizon or set a term in mind when you go into investment? Kasi this could also give you an idea on where you can, it will guide you kung saang type of investments mo pwedeng ilagay yung money mo kasi that would also coincide with the risk that you can take. Okay? So, if you're a short-term investor lang, let's say 1 year ka na mag-i-invest, hindi namin i-recommend na mag-invest ka into a risk investment. Okay? For example, equities or stocks. That might not be recommended kasi at any point in time that you need to take out your money, let's say 1 year nga, you don't know how the performance of your investment would be in that short term. And if it's a risk investment, there's a high risk na at that period, let's say after 1 year, baka hindi pa kumikita yung money mo or even worse, baka nalugi yung money mo from the investment. But if you can stay invested for long term, okay, 5 to 10 years or even more, you are reducing the risk. Kasi even if nalugi siya for 1 year, if hindi mo kailangan yung pera kasi you set that aside for long term, you can stick to your investment, maybe even add to your investment while the value is low. Okay, wait for another 2 years, 5 years, 10 years. When you check your value of your investment now, there is a higher chance that it is much higher than what you were investing in the previous 10 years. Okay, so you are reducing your risk and uncertainty by investing for longer. So for short term then, okay, so it's highly liquid. So ang options mo lang dito usually would be your money market or even deposits lang kasi you need to take it out at any point in time then. Okay, next is experience. What do you know about investing? Okay, and risk tolerance or how much risk you can take for investing. Now, to answer those two questions, introduce natin yung 4 investment personalities or risk profiles when it comes to investing. So we have conservative, moderately aggressive, and aggressive. So, si conservative, okay, ito yung first-time investor or maybe retiree na, so wala na masyadong sources of income and cannot afford to stay invested for longer na. So because of that, if you're a conservative investor, you cannot take a lot of risk anymore. Okay, so you would be okay now with low but steady returns when it comes to your investing or investments and slowly but surely yung approach mo when it comes to your portfolio. Si moderately conservative and moderately aggressive investor might have already some experience in investing. Maybe nakapag-time deposit na sila before, maybe nakapag-invest na sila into direct bonds, for example, okay? But with that certain level of experience, that also gives you a certain level of familiarity when it comes to investments. So you would be able to accept some degree of volatility. Hindi ka na magugulat na bakit bumaba yung value ng investment ko. Kasi you already know based on your experience that is possible indeed when it comes to certain types of investments. Okay, and then lastly, you have the aggressive investor. So the aggressive investor has a lot of experience na, okay, or has a lot of knowledge when it comes to investment. Okay? So because of that, he or she likes to take advantage of volatility. Kapag nakita niya na bumabagsak yung value of the investment, he doesn't see it as a detriment or as encouragement para i-out na yung investment niya. He sees it as an opportunity to add more to his investment. Kasi parang nag-discount yung market. Okay, hindi ako nalugi. Right now, at this moment, this is an opportunity for me to buy at a discount, to buy when the market is. Okay, so different mindset siya as an aggressive investor. Let's talk about the risk-return trade-off. So basically, it shows na when you go up, sa yung y-axis natin, when you go up to the risk level, okay, pag pataas ng pataas yung risk mo, yung x-axis natin or yung return, it should give you commensurate returns as well. And then when you go up, if ready ka na mag-invest, when you go up towards the y-axis, you go into money markets, you go into bonds, you go into equities, you should be expecting that the returns that you would be getting should be higher than the previous product. So if you go into money market, you should be getting returns more than deposit. If you go into bonds, you should be getting returns higher than money market, and so on and so forth. So you have to know this kasi you wouldn't be investing in a product that is risky pero mababa yung return. Or hindi ka rin mag-i-invest into a product na walang risk pero ang taas ng pinapromise na return. Kasi usually, yung mga ganong type of offerings, low risk, high return, usually ay yung mga scams. Next is yung investment asset classes na natin. So we have three here. You have your money market, you have your fixed income, and then you have your equities. When we talk about money market, this is basically your securities or investments that mature in less than 1 year. Okay, so this might include your time deposits, treasury bills, and even fixed income securities na less than 1 year na yung remaining term. So it's highly liquid kasi mabilis na siyang nagmamature or mabilis din siyang mabenta, mabilis siyang ma-flip. So it's very liquid and very little yung risk natin dito. Next is your fixed income. So this would give you potentially higher income at periodic and regular intervals. And you have varied maturities. So ranging from intermediate, let's say 1.5 year, to medium, let's say 3 years, to even as long as 25 years to some extent. But generally, nag-range from around 2 years to around 7 years. So yung risk natin dito, since hindi siya masyado liquid, okay, hindi siya mabilis mag-mature and matagal before mag-mature at let's say 2 to 5 years now or 2 to 7 years, then there is a risk na anytime in between when you invest into that bond and the time that it matures, there might be a need to liquidate. And when you do so, malaki yung chance na hindi favorable yung market. So you are exposed to moderate to even higher risk now when you go into fixed income. Okay, so also fixed income, ito yung mga corporate bonds, government bonds. So you have options then when it comes to your issuer. And then lastly, for our higher risk investment, you have your equities, or more commonly known in the market as stocks. So when you buy equities or when you buy stocks, you become a part owner of the shares of the company that you bought. Okay, so because of that, whatever is the income or whatever is the growth of the company, you share in that as well. However, if nalugi si company or nag-close si company, you also share in that. Unfortunately, you don't have, unless you're majority stakeholder, you don't have any say on how the company would be managed moving forward. So you really need to research on the company that you would be buying, particularly kung ano yung mga prospects nila, kung kumusta yung management nila before you consider buying certain number of shares ng company na yun. But compared to money market and fixed income, mas malaki yung income potential natin or yung return potential natin in stocks or equities. Okay, because of the higher risk. Again, medyo nadaanan ko na to, pero let's go into it in more detail. So money market, again, short-term investment, low risk, suitable for conservative investors or first-time investors or maybe retirees. Okay, so samples again, as mentioned earlier, treasury bills or time deposit. So basically products that mature in less than a year. Okay, next would be your fixed income instruments. Okay, so they provide regular income at prevailing interest rates. So some examples would be your government bonds like RTBs, FXTNs, and ROPs, and then corporate bonds issued by various corporate entities. So basically, when you invest in a fixed income security or when you invest in a bond, pinapautang mo yung nag-issue ng bond na yun. So for example, government bond, retail treasury bond. If bumili ka ng retail treasury bond, pinapautang mo si government. They use that money for any particular reason. Okay, so if they have projects, if they have improvements to be done, then they use that money in those. They declare kung saan gagamitin yung money. And then they pay you, like a regular utang, they pay you interest at certain periods. Okay, so it might be quarterly or semi-annually. And then you have corporate bonds. So kapag nag-invest ka sa corporate bonds, pinapautang mo naman si company or si corporation. So similarly, they might be using it for expansion or for new projects, new businesses, and then they pay you interest in it. Yung na-mention ko na examples kanina, those are direct investments. Right now, when you go into First Metro, they would be able to offer you what we call collective investment schemes, particularly UITFs. Okay? So when you go into a collective investment scheme, hindi na ikaw yung may mili kung anong particular security yung bibilhin mo, but you would be guided by the product itself and or by the company kung anong certain types of products you are interested in investing in. So for example, there might be collective investment schemes or UITFs na focus in money market. There might be UITFs focus in bonds or some focus in equities, different strategies than anything in between. But basically what happens in a UITF or a CIS, collective investment scheme, is investors, for example, you and me together, when we decide to invest, yung money that we invest would be pulled together in a certain fund. Okay, and that money or that fund would be professionally managed by fund managers of that particular fund. Now, say fund managers, what they do, sila yung nag-i-invest, sila yung nagre-research, sila yung nag-assess ng best options in the market, and then they invest that pooled fund into those securities, depending on what type of asset class or investment fund yung pinili na. So they invest in those securities. And then itong securities na to, depending if it's a money market security, bonds, equities, balance, or anything in between, okay, they would generate income either in the form of capital appreciation or yung interest payments natin or even yung trading gains natin. All of this income in any form or from the securities would be reflected back into the value of the UITF. So if nag-generate ng income yung securities under the fund, you would expect that the value of the UITF would also increase. So this new value would be reflected to your account. So this would be given back to the investor. However, as you can see dun sa diagram natin, it is a cycle. So hindi siya close-ended na or one line lang na you invest and then you wait for the security to mature. In a CIS or in a UITF, when you invest, okay, and then nakita mo, for example, after one day, kumita ka na dun sa investment or after 1 year, kumita ka na sa investment. As long as you are not redeeming, as long as hindi mo kinukuha yung money mo from the investment, then it would continue to follow this cycle. Okay? So si fund manager would continue to reinvest your money into the securities, and then itong securities na to might generate additional income. They might increase or decrease in value or anything that might happen in the future. But as long as you are not taking out your investment, then continuous lang siya na subjected to the market value ng securities natin. Okay? And that is how a collective investment scheme or a UITF works. Okay, so napasadahan ko na rin to kanina, but here are your types of investment funds based on asset class. So we have money market, bond, equity, and balanced funds. Basically, when you invest in CISs or UITFs, for example, money market funds, let's say you invest 5,000 pesos, yung 5,000 pesos mo, si fund manager would invest that into a portfolio of various money market securities. So, iba't ibang time deposits, iba't ibang treasury bills. When you invest in a bond fund, si fund manager would invest your 5,000 pesos into multiple corporate security or corporate fixed income securities, government bonds, and so on and so forth. When you go into equity funds, actually, ito yung maraming options. Depende din sa strategy ng fund managers natin. But when you look into your equity fund options, doon mo makikita kung saan ini-invest ng fund manager yung investment natin. So you might see asset classes or strategies na focused on dividends. You might see something focused on growth and so on and so forth. And then if ayaw mo mag-invest into multiple UITFs, you can also go directly into a balanced fund para automatically na siya naka-diversify into bonds and equities. So what are the advantages of UITFs and also mutual funds? So basically yung mga CIS natin. So when you go into a UITF, you get instant diversification. It means hindi mo na kailangan na on your own mag-invest ka into multiple different securities. Okay? Kasi when you go into a UITF, kahit magkano pa yung in-invest mo, be it 5,000 pesos, 1 million pesos, 1 billion pesos, naka-diversify yan into a portfolio of different securities. Okay? And that, dahil diversified ka, okay, lumiliit din yung risk mo. Okay, what does it mean? Kasi if, let's say, you only have, let's say, 100,000 pesos, and then nag-invest ka directly, let's say, nag-invest ka sa bond. If yung issuer ng bond na yan folds or nag-default, yung money mo would be lost together with that security. However, if you are diversified, lumiliit yung risk mo kasi hindi ka lang naka-expose into one issuer. You're exposed to a lot of different issuers. So if ever man, let's say worst case scenario, may isang security din na nag-default, okay, then hindi 100% of your money would be affected. And actually, to counter that then, yung possibility na mag-default yung security na pinag-i-investan, you have fund managers. So your investments are professionally managed. So before mag-default yung corporation na to or yung issuer na to, si fund manager possibly would remove that from the portfolio altogether. Lumiliit ulit yung risk natin because you have fund managers doing their research on a regular basis. UITFs also are very affordable. Okay? Manat, correct me lang if I'm wrong, but I guess the minimum for First Metro is 5,000 pesos. Okay, so with 5,000 pesos, you can already invest in a portfolio of instantly diversified investments. Whereas if you're going to go direct into the market, for example, you go into equities, you have to go into kung magkano yung lot na kailangang bilhin mo to buy specific stocks in the market. If you're going to go into money market, for example, so time deposit, okay, treasury bill, that might require you to invest siguro 50,000 pesos to 1 million pesos. When you go into fixed income securities, okay, bonds, mas malaki yung minimum usually. So 100,000 to 1 million to 5 million depending on the issuer. But with UITF, it's just 5,000 pesos and hindi ka lang sa isa naka-invest. Okay, economies of scale as well. Okay, so regardless if maliit nga yung investment or malaki, you are subjected to the same returns as anyone else invested in that particular UITF. So I mentioned mutual funds. Let's compare lang yung dalawang type of collective investment scheme. Actually, very technical na lang yung difference ng UITF and mutual funds. But for the sake of appreciation, let's go into the differences in detail. First would be the regulator. When you going to a UITF, ang regulator niya is the BSP, Bangko Sentral ng Pilipinas. Whereas for a mutual fund, it's the SEC or Securities and Exchange Commission. So structure, UITF is contractual. So when you go into a UITF, you are entering into a contract. Whereas for a mutual fund, it's a corporate structure. Okay? You are actually becoming a shareholder of that mutual fund company. Instrument, you are issued units of participation for UITF, whereas for mutual funds, common shares. However, as of late, nag-offer na rin siya ng mga unitized na mutual funds. For governance, you have your bank and non-bank and trust committee, whereas for mutual fund, you have the board of director of each mutual fund company. Okay, same din sa management. Okay, so it's the trust department for the UITF, and then for the mutual fund, it's independent investment company advisor or fund manager. Okay, for UITFs, when it comes to your sales license, hindi kailangan ng licensing, but a TOEP certified trainer should train the sales force of the particular bank or financial institution. Okay, but for mutual funds, all sales personnel should be licensed to sell mutual funds. So there is an SEC licensure exam that needs to be passed. Okay, there's no stockholders meeting for UITF, but for mutual funds, there is, because we are again companies or corporate yung structure. And there's no liquidity requirement for UITF, whereas for mutual fund, 5% of the net asset value should be subject to submission of the liquidity plan to SEC. Okay, otherwise 10% of NAV as well. Okay, so again, very technical lang yung differences nila. But if you're a layman na investor naman, there really shouldn't be any much difference between the two. Except maybe if you're into it, units of participation versus yung shares. But the rest, it's more on technical differences. So how do we earn from investment funds? Basically, you are earning whenever the NAV or the net asset value per unit of your fund changes. So you can earn or you can lose from your investment fund depende if tumaas or bumaba yung NAV. Okay, so let's go into a quick example. Let's say you invested 10,000 pesos. Ang NAV or price ng fund natin is 500 pesos. So that means you get 20 units of participation in the fund. So ayun yung pinangahawakan mo. Okay, ayun yung proof of your investment. Now, what if tomorrow yung value of the investment increases from 500 pesos, naging 550 na yung NAV po mo. Okay, so you still have 20 units, hindi nagbabago yung number of units mo unless you add to your investment or nag-redeem ka sa investment mo. So 20 units times 550, the value is now 11,000 pesos or 10% na ROI or return on investment. However, if the following day from 550, naging naman siyang 450 pesos and you still have 20 units, hindi ka nagdagdag, hindi ka nagbawas from your investment, that means your new value is now 9,000 pesos. So 20 units times 450 and ROI of negative 10%. Okay, so wrapping up na tayo. So some tips lang. Investing is not a straight line. That volatility is always here to stay. Okay, so it's up to you on how you can ride that volatility. If ayaw mo talaga, it's up to you if you want to stay clear of that volatility. Okay, so timing does not work. Usually, yung iba naghihintay. So nakita natin to. This is a chart ng PSEI. Some of them naghihintay na bumagsak yung market, but no one really knows kung kailan babagsak yung market or kailan tataas yung market. So timing does not really work unless you have the power of hindsight. Okay? So what we recommend is time in the market, not timing the market. So if you can stay invested for longer, then you are minimizing or reducing your risk. Okay, so instead of timing, what we can recommend you to do is peso cost averaging and consistency in cost averaging. Okay? So it means basically buying on a regular basis. Even if not mababa yung market this month and then mataas next month and then mababa ulit the following month, regardless of that, kung mataas siya or mababa, if you add on a regular basis and consistently, you are doing cost averaging or you are getting the average cost of the market. So walang regrets na sana pala nitong time ako nag-invest kasi you are not timing the market, you are getting the average cost. And lastly, do not put all your eggs in one basket. Kasi there might be times this particular asset class would be performing better, but there would be also times na this asset class naman would be performing better. So it's better if you are able to diversify into other asset classes as well para hindi ka exposed into one risk only. Okay, so parting slides na tayo. So key takeaways again is your questions, hero or horizon experience, risk tolerance, and objective. Timing does not work, but with the market condition now, it is the right time to invest. And lastly, and I guess pinaka-important para maiwasan natin yung investment mishaps, is to diversify your portfolio.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.